Hi everyone, this is Knowledge Topper, and in this particular video we will understand another important type of securities, which is marketable securities. Like, what are marketable securities, what are the characteristics related to marketable securities, what is the purpose behind marketable securities, and we will understand the two types of marketable securities in our next upcoming video. And we'll understand marketable securities in detail in this video. And I already made a detailed video on fixed income securities, which is another important types of security. If you want to watch that, you can watch it by clicking the link in the at the end of this video, or you can also click the thumbnail at the end of this video. Now, before moving towards the main, if you didn't subscribe our channel Knowledge Topper yet, please do subscribe our channel Knowledge Topper, as well as like our Facebook page, and do join our Facebook group as well, where you find a lot of good material related to these topics as well as from other courses as well. So let's get into this video. As written on your screen, marketable securities are financial instruments that can be sold or converted into cash at reasonable value within 1 year. Now, from this small understanding, you can understand marketable securities as like they are basically, you can say, sold very easily and converted into cash, because they are highly liquid investments, and they are basically, you can say that they are basically generally issued by businesses or different governments as well, to raise funds for operating expenses, or for if they want to expand their plant or any investment. So basically the main purpose behind is the liquid investment. When a business invests in these marketable securities, it is usually to generate short-term earnings, or for producing excess cash. Okay. And marketable securities are basically unrestricted short-term financial instruments that are issued either for equity securities or for debt securities of a public listed company. These are the two types of marketable securities. One is equitable marketable securities, and the other one is the debt marketable securities. We will understand both of them in our next upcoming video. Now, moving towards some important characteristics related to marketable securities. Now, you know that the most important characteristics when it comes to marketable securities is like, you can say that having such a short period of a time, the return is though lesser, but because of the lesser duration, these are highly liquid, and mostly investors are more eager to grab this type of investment because of the short maturity periods, which basically tend to be less than a year, and it helps in converting or liquidating these investment into cash much more easier than in the case of if you talk about longer term securities. So yeah, the main characteristic, or can they say the main purpose behind marketable security, to choose marketable securities, is because they have a maturity period of 1 year or less, and they have the ability to be bought or sold on a public stock exchange or public bond exchange as well. They having a strong secondary market that makes for liquid buy and sell transaction, as well as rendering an accurate price valuation for investors. It helps them also. And when we talk about it has higher liquidity and effectively lowering risk as well. And the most important thing, like, do not assume that marketable securities are cash or cash equivalent items, because they are because money market securities due within 3 months. Okay, so they are not lesser than 3 months. That's why we are not assuming them as a cash or cash equivalents. So now, moving towards how do marketable securities work. So remember that there are 3 different ways, like when marketable securities can be categorized by an investor, from the perspective of investor we are talking about. And the main thing is the intent or the purpose these are the three things that will determine how they are handled from an accounting perspective. Okay. So first of all, when we talk about trading securities, like held for trading, the main purpose is to held for trading, like for purchase and for buying and selling of that particular marketable security. Like when we talk about held for trading purpose, these marketable securities are basically purchased as a means to generate short-term profit and are generally held for less than 1 year. They are listed at fair value on a balance sheet, and if there are any gains or losses made during the holding period of that particular trading security are also recorded, and basically the temporary fluctuations in market value of these trading securities, whether there is unrealized gain or there's unrealized losses, they are recorded on an income statement. Okay. When we talk about the second type, basically, which is held to maturity, mostly in case these marketable securities are basically held by companies until they reach their maturity date. Okay. Like we'll understand this held to maturity case in our next upcoming video, in which we are talking about the types of marketable securities. So basically, if you want to understand the complete picture of marketable securities, you can also watch those two videos as well. Okay. Where I will try to explain in detail about marketable securities and with examples. So you better understand about that if you watch that video. The main purpose behind held to maturity is like these marketable securities of held to maturity are held by companies until they reach their maturity date, and basically if that date is within 1 year of the purchase date, they are considered short-term investment, and therefore it will fall under current assets. Okay. Like if I can show you the balance sheet of renowned company, as you can see, it is a blurry picture, but you can easily see right here. There's marketable securities, there's current assets. Okay, this is a section of assets, and we have we can easily see current assets here, and then we have cash and cash equivalents. I already told you, like we are not considered cash and cash equivalents as a marketable security, because marketable security is not lesser than 3 months. Okay, so marketable securities here. Okay, and we can record it right under current assets item if they are lesser than 1 year. And do remember, like if the date is greater than 1 year from the purchase date, so they are considered long-term investment. They are automatically converted as a long-term investment, and they are not recorded as current assets, but they are recorded in non-current assets right here. Okay, right here, non-current assets. They can be recorded right here on non-current assets. So the third is basically available for sale. Like these are debt as well as equity securities that aren't basically intended to be traded for profit or held until maturity, but they are listed at fair value on a balance sheet, and along with any unrealized gains or losses, and unlike trading securities, unrealized gains and losses do not need to be reported on an income statement. We already discussed, like if we talk about held for trading, we will record basically any fluctuations, like any unrealized gains or losses in income statement, while if we talk about the case in available for sale, we basically do not need to report it these unrealized gains and losses in income statement. Okay, so now we will move forward. If we talk about the two main types of marketable securities, one is the marketable debt security and the other one is marketable equity security. We will understand both of them in our next upcoming video with example but I will give just a bit of overview in this particular video, so you can just have an idea about what is marketable debt securities and what are marketable equity securities. So basically, if we talk about marketable debt securities, they are short-term bonds like lesser than 1 year, and it is issued by a government or any public company and held by an investor. Okay, like if you talk about the examples of debt securities, they are government bonds, they are certificate of deposits, they are corporate bonds, they are treasury bills, as well as they are purchase agreements as well. And when we talk about equity, marketable equity securities, they are basically issued by a public company and it held by an investor. And the example of that is the common stock and preferred shares. Okay, and do remember that like marketable equity securities are basically generally considered short-term investments. As I already told you, like the main purpose of marketable securities is um, to produce higher liquidity and having effectively low risk. So marketable equity securities can be recorded as both as current or non-current assets because of the intended purpose. Okay, like if the securities are purchased as a means to acquire or control the issuing company, which leads to like basically they would be reported as long-term investment, because the main purpose is to acquire or control the issuing company, and you cannot aim to purchase such kind of securities like for lesser than 1 year. So the main purpose is, I already told you, to generate high liquidity as well as low risk. So this is the video for all of you guys. Hope you understand about marketable securities in depth. If you like this video, thumbs up, do subscribe our channel Knowledge Dropper, as well as like our Facebook page, and do join our Facebook group as well, where you find a lot of good material related to these topics as well as from other courses as well. In our next upcoming video, we will broadly understand the marketable securities types in detail and with examples. So do watch that to have a complete understanding of marketable securities. So this is the video for all of you guys. Thank you so much everyone. It's time to say bye bye.